Evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Monday, March the 6th, 2023. I started to get what I am now going to receive as some indications that our high for minor wave 2 is in. And so let's kind of go right to the futures market. We're going to take a look at the NQ first. And yes, I can count 5 waves up to complete a C wave. 1, 2, 3, 4, 5. Third extends as it should have. The 4 came in larger, which I really needed to see. This would have been made a third if it had to, but it again, in the larger picture, is much cleaner to have done that and then finish it off with a fairly solid grab for the brass ring up here. Now, the market has basically dropped over 100, dropped 150. In fact, it was down more. This is now up a little bit as Globex gets started, but 5 up. Hourly chart, I would like to see 5 down. Could that be 1? Yeah, it could. We get a little 2 or a little bit. Yeah, that does seem like forever we're in 2s. I get that, and I understand. And this one was the minor. This is a completion. That's going to be a sub-minute one, or possibly even a minute 1, minute 2. So you see, we shrink the degree. We come down an entire degree. These are minutes. So maybe we get a little bit, we come up. Right now, though, I will say that I'm watching to see how they're going to trade it. And, you know, they're very cautious. And my thought would be, I would not step in to buy this unless I had to. So that's what I think is going on right now. These are traders. It's like, you know, they're being told, or they want to neutralize some deltas or just get a position that's flat going into tomorrow. And again, tomorrow, we can't forget that our favorite Fed governor, the chairman, goes before the Senate tomorrow. So not sure exactly how or what the reception will be like, or what the questions will be like, or what the testimony will be like. But it should be interesting, and likely there'll be algorithms running in full speed to pick up every little tidbit that is discussed, said, or reported from Powell. So I would think we might get some decent moves. But quite frankly, the way the market is positioning itself, I'm beginning to believe that the algorithms are going to receive things more negatively than positively. Now, if we're considering that this is done, that would suggest that the reason it was done is over, is also complete. And the reason wasn't because we're having this internal battle over interest rates. The reason was more based on expirations. And if this one goes and they're able to start bringing it down, fine, no problem, bring it on down. So we'll see. Now, what are we looking at for tomorrow? As you can see, I basically took off all the Fibonacci because I want to rebuild, but I'm going to start by showing if indeed the market still has additional rally to do. Again, let's put it all into perspective here. Yes, I'm counting 5 up. Yes, I'm now looking for the development and the creation of a 5 down, at least on a minute level, which I believe we've got 1, and we're going to go into a minute 2. So I want to see 5 waves down again to give support to this is complete and to set us up. But for right now, I will be bold. Yeah. I'm laughing to myself. I will be bold. Yeah, well, and I'm not trying to challenge the market or anybody else. I'm just putting down what I believe I'm witnessing, but I'm going to give you both sides. That I promise, so that the world to see. Okay, put that there, and I'm going to put this above it. So, and then we will get to putting our Fibonacci up, which is actually kind of the same area. We look at the tools. It was a decent trading day. Not always the easiest, but lots of, oops, wrong color, lots of follow through. So there was plenty of follow through, obviously, but it took, like the market rallied for the first hour and a half, and then it declined for the balance of the day. Not always as clear, not always as fast, but still a good trading day overall. Now, what can we look forward to? First, what I want to do is I'm just going to put back on, okay, the Fibonacci extensions, which are going to show if there's anything left to this C wave. Come on, right there. So we've actually came up pretty high. We've actually topped out above 2.382, excuse me. And that's pretty high. We still had additional, what made it okay is we had additional, now I'm just rebuilding, not extension, just the regular retracements for a wave 2. Oh, crap. Let's try that again. These are going to be approximate. And so we have still 12,528, and I'm probably off by a very little bit. Yeah, hold on. So I think that we're well on our way, and that we should follow up with, I think if I go down deep enough that the likely is 5 down, or they're coming off impulsively, and it is coming off in an area, in a manner that I had been talking about, that it's rejected, and I feel that that high was rejected. You know, buying's done, selling goes on. So, but I just put just the plain retracements. It gives us an additional level above, because what wave 2 cannot do is go and break the starting point of wave 1, cannot exceed it. Therefore, if it does, it's not a wave 2, obvious. So here we're safe. It was solid, but it fit the pattern, and everything seems to have rolled out pretty smoothly. So I am looking for it. So now let's go back in the other way. I'm going to take that down. If we still had upside, it's got to come in it's got to come in a 5-wave pattern. This was 5 waves. It was all internal, but it produced 5 waves. So it has to be impulsive like that. And it would have to likely be even bigger, because you're pushing into greater territory. It's like, why are we here? So again, I cannot discount it. I cannot toss it out. I have to include it. I believe that's prudent. And if they do it, we will trade it, or I will trade it, because I can wrap parameters around it, and I'll be looking at the structure. I'm not looking for another breakout. I'm not looking to turn bullish. I'm merely trading what's in front of me at that particular moment. And if it's going to move from the current levels, which is 12,330, and it's going to go back above 12,400, yeah, I think I can participate and make some good money. And then I'm going to leave it at that. Now, if we're going to go and continue lower, let's try to put some parameters around our smaller moves. Right now, best I can do to start is to put retracements, come on, retracements in. That gives us where we could find support if we're just retracing with an additional run. So we have support basically right where we are. You can see it went down, dropped through that initial support, now hugging it. And I don't blame them. Again, I wouldn't be buying unless I had to, and I'm waiting for the market. I'm waiting for greater numbers. I'm waiting for the bigger players. You let me know. I'll join them. So sitting right there. Next down the line, we have 12,236, and the 50 right below it at 12,241. Actually, the 50 is just above that fib support. So we got 41 down to 36. We have 160 to 175, I'll call it. And then we have to 12,112, 113 at 12,080. And we start to break. Now, as I've spoken before, I think a rejection has to be, in my mind, I want a rejection to give me confirmation that it's going to drop out of the 12,000 handle, that it's coming down below 12,000. And that's what I would consider that first initial rejection. This 400 points really doesn't belong. It's like, it's kind of air. It's kind of, you know, whatever. A lot of money changed hands. And don't forget, since a lot of this was index, it's already settled in cash, including today. So tomorrow's a new day, and that's why we must include all of the possibilities. So now let me just take this one step. If I bring this down to the 15-minute chart, and I got a 1, 2, 3, 4, 5, and then we're looking for a little bit of a bounce. Yeah, and nobody wants to make that bounce. 1, 2, 3, 4. Yes, because we still really have one more drop and then a little bit larger bounce. So this is actually not even the complete on a 15-minute of the first minute 5 down. It's still got a little bit more to go. It may drop overnight. We could get down to 12,236. That's our next support, and the 200 is right there at 12,250. Logical. Everything in between, we should find support at 12,295-ish, and that's it. And we drop. We get down here, and then our support levels are right in here from 1250 down to 12,230. That would be enough for the 5, right? Since we've got this, the 3 was large, the 5 could get down to there, or the 5 could stop anywhere in here. Then we get a 2, and you would run again your fibs retracements from that high down to wherever this low. So this high right here, down to wherever that low is put in, whether it's here, here, or here. You put in that low, and now you're going to get your fibs as to where that wave 2 rally should come in. And remember, we're going down a degree. We're just finishing a minor 2, but now we're inside the minor 3 and tracing out that first wave. So it's a subminute. This has got to be subminute, because I'm looking for a pretty large 3 to bring it down pretty far. So subminute level, fine. I want 5 and the 15-minute, and I want to be able to count 5 on the hourly. We're close. We're very close. And then we'll get a rally. Over in the S&P, your bare bones, here again, 1, 2, 3, 4. Much cleaner 4. Nice, formed, angling the whole shebang. And here we got a quick 4, quick 5, all coming in basically at the same level. And it got up to 40.82. So they really were thinking, oh, 4,100, here we come, knocking on the door. Bam, shut it down, and then came off. Now, in this market, we came off from that 40.80 level or 40.83 level. And our low was right there at 40.48. So, you know, good 40 points, 35 to 40, 38 to 40 points. Nice. So rejection started. It's in the same position, I believe, as the NASDAQ. And like, this is like likely a very small 4, a sub-minute 4, inside the sub-minute 1. So yeah, it should be a fun ride down. All right, let's start building it. Upside, 4,100. There's plenty, lots up here. And it actually is likely going to come in like a 40.85, all the way up, 89, 90. Just you pick it, and it's going to go all the way up. It will swarm itself around 85, 90, 95, 41. It's going to swirl around those strike prices. All right, now looking at additional downside, same deal. I'm going to go to the bottom of 1. Okay. See what we got. Initially, 40.46. So we almost got to there. And it's 40.45. So we got within a point. That is likely why that stopped there. Close enough to the support, put in a little 4, come down. So it would not surprise me to see the S&P drop down to closer to 40.30 to complete this initial small 5 waves down on the 15-minute chart, which should also then produce 5 waves down on the hourly chart. So same fibs, but we're looking the possibility that it could drop down to 40-30-ish. On the hourly chart, we have the 50 EMA at 40.29. Perfect. We have 382 at 40.22. Perfect. And that fits if indeed the S&P still had upside to do. But on the hourly chart, 1, 2, 3, 4, 5. It's pretty clean any way we want to look at it. So I'm okay. And I will label that exactly, but I'll wait until we're done. And but I will put it up on the chart. In any case, I do think we're headed lower. I'm going to put the 2 there, and I think we're starting on this 5th wave down. I, again, will wait for confirmation. We've been trading this for a while now. We know that they just get to burr up, you know what, and then boom, it's heading for the moon. So, and it can do it. The main point there, nobody's right, nobody's wrong. Trade it. Keep trading. There's going to be plenty to do. There's going to be trading in many different instruments. We're seeing volatility across the board. In the equities, we see volatility in the individual equities. We see the volatility in the indexes, the ETFs, etc. They're volatile, they're tradable. They're also in the treasury market. It's volatile, it's tradable. The 30s, the 30-year bond, I'm telling you, it's crazy. That's a huge move in a bond. In the 30-year bond, they are struggling to find out where they should put this, and then look at today. You know, they got up almost to 126. That's all I really was looking for to complete this move. And if it's a 4, and I can kind of get an AB in there, like a 5-3-5 hourly chart, 5-3-5, put a 4 on it, boom. If that's what the case is. So this is looking like we're going to start heading, that the rate will go again. We'll see yields rise, bond prices drop. If it happens, we're going to break. See, they're hugging this now. Hourly, you got the 200s and the 50 just grouped together tight. And then the 4 and the 8 all sitting right in there. That's why it's sitting still. And they go, okay, we got to start breaking this before we start picking direction. But right now, it can go either way. And it was well bid. It was well bid and offered. So, you know, the spread tight, as it usually is, but big numbers on both sides that I haven't seen in a while. Let's put it that way. So the trading is there, and it is moving. And that's a great contract if you can trade it. It's $31.25 a tick in the 30-year bond. So the same thing in the 10-year note, but it's the 30-year that's going nuts. 30-year is just all over the board. 10's also doing a fair representation of crazy as well. Much cleaner on the B. A, B, C. This is looking serious. So what that then suggests, and I know you're all not bond traders, but I'm going to include this because this is important. What happens in the bonds, again, remember, go up the top. What's sitting at the top? Interest rates come down. There's bonds. That's the representation. What's below that? The currency. We're watching that. What's below that? Corporate. We're seeing the turn. So these kind of went up. And as we left it, a little 4. Look at it on the daily. A little 4. When we put it down in the hourly chart, a little 4. Wow, pretty cool. This was Thursday. This was today. That's a big move. And I think the next big move is in the other direction, and it will come as 5. So we're looking for a 5th wave. Indeed, that's it. So again, just to review very quickly, it suggests that the alternate, I take the parentheses off, and that becomes the count. Remove the A, the B. And this, move that down to there. This becomes the B. That becomes the C. B, we're done. That's out there now. And that's what I'm looking at. And now it's like, if that's what's happening, these equity markets are not going to be moving up. It just doesn't fit. It's like too opposite, directly opposite of what the market should be doing. So I'm going to leave it right there. And so I'm looking for the continued development to the downside. And that includes bond prices. Yields I expect to go up. And don't forget, tomorrow, Jerome Powell goes before the Senate and speaks. And I do not believe that we have additional numbers. I don't have it up there. So, but I will get them. But I didn't think we have any except Jerome Powell. Our next update will be on Tuesday, March the 7th.